please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
After announcing a 5-point plan to combat the fall in the rupee and rein in the current account deficit, the government is now readying measures to curb the imports of non-essential items. Economic Affairs Secretary Subhash Garg said that import duty hikes will be announced very soon. He was responding to CNBC-TV18's question on whether the announcement is expected this week. Measures announced last week have done little to stem the fall in the rupee, and the current account deficit stands at 2.4% of GDP in the first quarter of this financial year. Attempting to calm trade nerves, the Economic Affairs Secretary also said that the rupee depreciation is a temporary phenomenon. He went on to assure that the government is committed to fiscal consolidation and asserted that the 3.3% fiscal target will not be breached. Joining us now, former DIPP Secretary Ajay Dua and Jayant Dasgupta, former Indian ambassador to the WTO. I'll go to them in just a bit, but first listen in to the Economic Affairs Secretary.
Can we expect further measures this week? Only that much.
Just clarification. When are you going to announce the measures on the non-essential items that you
Can we expect
this week?
Can we expect this week, sir?
Very soon.
Soon, that is the Economic Affairs Secretary responding to questions on when the next installment of measures are likely from the government. Joining me now, Ajay Dua, the former DIPP Secretary, also with us, Jayant Dasgupta, the former Ambassador of India to the World Trade Organization. Gentlemen, appreciate you joining us here on the program. Mr. Dua, let me start by asking you, and you know, I've been having this conversation with the former RBI Deputy Governor Rakesh Mohan, the former Secretary Rahul Kullar. Yesterday, I spoke with the former CBC Najib Shah, and the opinion is this is going to have to be a very judicious, delicately balanced exercise, because you don't want to hurt existing programs like Make in India, Digital India. You don't want to send out the message to foreign investors, to global investors, to say that India is in fact closing for business. So what would your view then be as the government traverses and negotiates this path on hiking import duties?
I think whatever has been said yesterday, I find a great amount of validity in that the government will have to be very judicious in deciding the course of action to check the imports. Certainly, we need to check the imports, but the choice of items has to be seen from the point of view of domestic inflation, the interest of domestic consumers, as well as our international stand, both in WTO as well as vis-a-vis our trading partners. I would think that looking at all these things, two candidates come to my mind, two commodities which perhaps the government could impose duties, whether it is higher customs duties or fixing minimum import price, which is also an equally effective way of checking. One of that is thermal coal. Thermal coal, which we are importing in large quantity into India, despite having huge reserves of coal in India, and Coal India may be temporarily not in a position to step up, but certainly has the potential to go along and ramp up its production. Second, I think whatever might be said by...
I'm interrupting you. I'm interrupting you because I want to specifically talk about thermal coal, since you brought that up as an item where you believe that import curbs perhaps would be warranted. Now, in a story that we did just yesterday, the view within the CBEC at this point in time is that coal perhaps would be an item where it would be detrimental to growth, to hike the import duty, and that is because while you pointed out that Coal India has reserves, the fact of the matter is that it's not being able to keep up with demand. In fact, across the board, several power plants have reported in the last few months that they have been operating at pretty much critical levels of coal, so, which is why you're seeing the import of coal. So would it then be a good idea, as you suggest, to hike the duties on coal?
Shirin, I think there is we need to see it a little more closely, the coal position in the country. The imports are taking place largely for coastal-based power stations, which have come up based on certain thermal mix that they would get 70% of imported coal, 30% of local coal, and then blend it and use it. The fact of the matter is we have seen a spike in imported coal because of economic reasons as well. The cost of production of Coal India, plus moving it, and the uncertainty of availability of railway wagons as well as the logistic costs has made the imported coal at the coastal power stations cheaper. But it is not per se the coal itself. What Coal India can certainly supply more. What we need to be beefing up is our railways movement as well as the logistic costs of doing that. We have done that in the past, but of late we are seeing most coastal stations have switched over from domestic coal to imported coal. That is why the pithead stations as well as some inland stations were finding it difficult to get coal. But we also must remember that over the years, Coal India has always had disruption in ramping up its production during the monsoon season. Now that the monsoon is over, I think they can certainly ramp it up within a month or two, their coal production to meet the demand, including of the coastal power stations, because coastal power stations can run
so that's your
on
first
30%,
candidate.
40% import. That's right. Second, Shireen, I would say, despite whatever might be said by the Gold Council, jewelers, etc., at 10% duty, we are finding that gold imports continue to rise. We have seen last month an increase of over 70% and July 40%. Probably they are preparing for the festive season coming forward in the next couple of months or two. I think at $15 billion, already we've seen $15.3 billion higher than last year. The gold certainly becomes a candidate for a higher customs duty, maybe 20% even. Because our jewellery exports, which is often cited to us, will suffer. The jewellery exports is only value-added import what we get. Value-added in India, it is not per se the full value of exports which come from there. So I would recommend that going forward we must look at these items very closely. And the third broader one is certainly
I'll come back to you for the third one. I'll come back to you for the third one, sir. I'll come back to you for the third one. Let me bring Mr. Jan Dasgupta into the conversation. And Mr. Dasgupta, you know, Ajay Dua, they're giving us two candidates where he believes potentially some action on the part of the government may be warranted. Our information at this point in time, and I want to caveat this very clearly, that there is no final decision yet, but reservations have been expressed by the CBEC, by the Department of Revenue, on any curbs being imposed on gold and coal. Whether a decision later on is taken to do so is a different matter altogether. That list is yet to be finalized. Do you agree, A, with those two commodities specifically, sir? And what would you recommend in terms of action that you expect from the government?
I think as far as coal is concerned, I take the point that, yes, I think as far as coal is concerned, I take the point that Mr. Dua has made. But I think the emphasis that the Ministry of Finance has been putting is to curb non-essential imports. And by non-essential imports, we should not really be hitting areas which are vital for keeping the wheels of our economy moving. For instance, power generation. It is the same thing with crude oil, with gas, for instance. So I wouldn't put coal in that list right away, right at the beginning, and I would wait and watch. As far as gold is concerned, this has been a problem over the years. I remember 2 or 3 years ago, it went up to $62 billion for the year. Now, as far as exports are concerned, you know, you can import gold duty-free, provided you export the product after conversion, after value addition. So that should take care of our export concerns. And gold is one of those non-essential items which I think, in case there is a spurt in its imports, especially in view of the coming festival season, we can think of curbing imports or by raising the tariffs on gold imports. The third point
you're
that you mentioned,
right. The government has said that its intention is... Yes, go ahead, sir.
The third point that you mentioned, I don't think the situation is very grim at the moment. The rupee has been fluctuating, I think, in the region of 72 and 73 rupees to the dollar. And we have ample foreign exchange at the moment. And even the IMF has said that we have corrected the rupee to the extent of 6 to 7% only. And this was something which was long overdue. Because if you look at the inflation rates between the US and India over the past few years, the artificially pegged, perhaps, value of 65, 66 rupees to the dollar was not sustainable. It would have fallen. And the exporters had been asking for the rupee to come down to its natural level. So I don't think there is cause for panic yet. But yes, if we can cut down a bit on the non-essential imports, things which could be termed perhaps as luxury items, it would be better to that way to tighten our belt and be in readiness.
Well, and as you pointed out, sir, to be fair to the government, they have very categorically stated that their intention is to act against non-essential imports. So I don't know if thermal coal would qualify as a non-essential import, given the current economic situation. But when we talk about non-essential imports, I'll come back to you, sir. I'll come to you, Mr. Dua, in just 1 second. On the issue of luxury items, and I go back again to the point that a judicious balance has to be kept in mind. You don't want to start to impose higher tariffs on components which could hit Make in India, especially when you talk about smartphone manufacturing, but they may want to look at the possibility of higher tariffs on expensive smartphones, for instance. Mr. Dasgupta, a quick comment from you on the luxury and so-called sort of high-end list that could be on the radar.
I think the kind of differentiation which we had made in terms of cars, in terms of watches, in terms of other items which you know, could be paid for by the very rich, the elite. They for those items, I think the import duty could be raised, but it's not going to save much of our foreign exchange outflow, because the imports in those items do not amount to very much. So we can do it as a cosmetic gesture, but it will probably not bite very much.
Exactly, and that brings me to the conversation that we were having this morning with Jahangir Aziz of JP Morgan, and he said, you know, we're tying ourselves up in all of these knots with these possible import curbs and these measures that were announced to try and prop up the rupee, which clearly haven't helped, when the fact of the matter is that we need to work on instruments to prop up domestic savings where the problem lies. So are we complicating matters? We do have $400 billion worth of reserves. Do we really need to go down this route of looking at import curbs, etc. today?
Shirin, are you asking me that?
Yes.
Shirin, if you're asking me, my comment on that is, all right, right now we have about our reserves at $399 billion are about 7.5 months of import bill. There is an IMF projection that if the deficit continues at the rate at which the monthly deficit continues, we would be in March 2019. That means at the end of the current financial, lower than where we were in 2013. In 2013, we had 6.7 months equivalent of our imports was our reserve, and at this pace of depletion, we could be 6.5 months in March. So I think let's not be too complacent that we have $400 billion, but $400 billion, what is it worth to finance our import bills? That was one point. I was making this point, sorry to be laboring that point, on thermal coal. Right now, the plant load factor of thermal power stations is most of them are operating at about 60% PLF. With that, the demand for coal, demand for power in the country has reduced considerably. Alongside that, so there is room for economizing on coal utilization, inventory of coal, etc., being kept at power stations. The people have in the past imported much more than they needed because they were apprehending an increase in the international price of thermal coal, which happened. People have imported much greater amounts than they wanted, quantum. Second, we've had good monsoons. Our reservoirs are full. The hydropower for the next few months can be a stable source of power supply in case there is any cause for thermal coal. Anyway, that's the second point. Third one I wanted to talk to you about is the non-essential imports which you talked about. Mobiles being imported into the country made high-end mobiles with very little make in India component in it. They are a candidate straight away. Refrigeration, big size refrigerated equipment, home refrigerations are also being imported. Watches, high-end watches we talked about. There is a fair amount of high-end furniture coming into the country from Singapore, elsewhere, Southeast Asia. I think some of these might be symbolic. They may not add up to more than a couple of $1 billion, but they send out a message that the government means business, and it is going to be hitting the rich, the people on luxury items much more than the common items like crude oil, gas, where we have issues. But there as well, I would say, dependence on crude oil needs to be reduced going forward, and let's not be killing our renewable program on our own by looking at safeguard mechanisms, etc., because the imports from China, Malaysia are being checked. We have to be very careful about it, because renewable energy is a way forward to check our imports, both of coal as well as crude oil and gas.
Dependence. Okay, I'll end then by asking you, Mr. Dasgupta, both of you in agreement that, import duty hikes on these luxury items may not really amount to much. They may not help rein in the current account deficit, but perhaps send out a larger message. But what would the concern be, especially when it comes to sinking these rate hikes, if at all, with bound rates, which is the commitment, running foul of the WTO, and also about the possibility of using the FTA route then for these imports to make their way into India?
There are two things. The FTA route works on applied tariffs. So whatever is applied, it will get, the margin of preference will act on that, provided we have not really brought it down as part of the agreement. In certain agreements we had brought down the tariffs by 2012, then by 2017, and so on and so forth. Now, once we have brought them down, we can't raise those tariffs. Of course, it is open to negotiation. As far as the WTO is concerned, in most items, in industrial products, for instance, our average tariffs are at 34%, the bound tariffs. So there is plenty of water, as we say, between the applied and the bound tariffs, and we can raise the tariffs in most items quite comfortably by remaining within our WTO commitments. So that is not a problem. Whether the non-essential items list by raising the tariffs on those, whether we will be able to make substantial savings in terms of foreign exchange outflow, that is the question to be addressed.
Well, that is the question to be addressed, and we are still awaiting final clarity from the government on the list where import curbs are likely. Separately, there is also a Cabinet Secretary-headed panel that's looking at the larger issue of import substitution. Will all of these panels be in sync? We don't know. One would imagine that they would be, but we are awaiting that final list. The Department of Revenue and the CBEC have expressed some concerns about coal, for instance, about gold, for instance, but finally it will be a political call that will be taken. Jayant Dasgupta, Ajay Dua, appreciate you joining us here on CNBC-TV18 to make sense of the possible import curbs on the anvil. With that, it's time for a break. When we return, there's a lot more coming up.